What are some typical signs that a business owner might be in the wrong entity type for their tax situation?
Well, for an operating business, the sign is that they're paying self-employment tax. And if they're very profitable, they're going to be paying more in self-employment tax than they are even paying in federal income tax. And you can just see that right on page 2 of their tax return. There's two different lines, one for self-employment tax, one for federal income tax. And most people think that they're just paying federal income tax, but they don't understand that there's this whole other system of taxation called self-employment tax.
Why do you think so many business owners stick with an LLC without realizing an S Corp could save them thousands?
They just don't know, you know, or maybe they ask their accountant and the accountant, it's more work for the accountant. And not every accountant knows how to prepare the S Corp tax return. That's a much more involved tax return. So that's one reason. Another reason is maybe they're just self-preparing their returns, and most, just business people, lay persons cannot prepare a S corporation tax return. And that's it's not intuitive. You have to have a balance sheet. You have to be able to roll forward the equity accounts. Things have to really reconcile. You need a CPA usually to file an S corporation tax return. So um, that's probably the other reason, is it's too complicated.
Mm. But then they lose in thousands of
Yeah, then they're
dollars.
losing thousands. So say if somebody's making $200,000 a year filing their own tax returns, thinking they're saving money, they're probably paying $25,000 a year in self-employment tax that they didn't need to pay. So
Mm.
they
Yeah.
dollars ahead to pay the planning fees.
Yeah. So that was my next question, actually. Can you break down the potential tax savings of choosing S Corp status for a high earning LLC owners?
Yeah. Okay. So the sort of simple way to explain it is all of your earnings over and above your reasonable comp wages are not subject to self-employment tax. And that self-employment tax is 15.3%. So if your company makes, say, $100,000 over and above your reasonable comp, then you're going to save $15,300 by being an S corp. If you make $200,000 of profit over and above that, you're going to save almost $30,000. If you make 300,000 over and above that, it doesn't keep going up ratably, because the amount of self-employment tax you pay is at 180,000 it changes. Then you only pay Medicare after that. And then if you get above, let's see, I think it's like 380, then about 400, then you pay another thing called additional Medicare. So there's about 3 different stages of how you calculate self-employment tax depending on your rates, but the very maximum rates are on the first 188,000 this year.